Welcome back to the Daily Crypto Roundup, the show that keeps you ahead of the market, ahead of the news, and ahead of the narrative shaping the next major moves in crypto. Today we've got a really solid slate of stories, because the market has actually given us something we haven't seen in a few days. A bit of strength, a bit of confidence, and a bit of genuine momentum. Bitcoin is trying to lift its head again after that bruising week. Altcoins are finally seeing rotation signs, and we've got institutional flows that genuinely matter. On top of that, Amazon just dropped a $50 billion bombshell into the AI sector, and that has had a ripple effect straight into crypto. So today, we're going to break down exactly why the market is up, whether this bounce is real or just relief, and what you need to watch as we move into the next cycle of volatility. We're also looking at some big news that could shape the next few weeks. Grayscale's new Doge and XRP trusts have now gone live, which is a massive shift that barely anyone in the mainstream press is mentioning. We're going to talk about whether there has been any early impact, what the flows look like, and why this matters more than people think. We're also going to get into the altcoin catalysts coming this week, including the Doge ETF momentum, the XRP ETF chatter, and the Monad mainnet launch, all of which paint a picture of an altcoin market that is gearing up for something. Whether it delivers is the big question. We're also going to revisit something we told you last week, because it's now been confirmed by none other than Binance's CEO. The recent Bitcoin drop wasn't panic, wasn't fear, wasn't the end of the cycle. It was pure deleveraging. Exactly what we said here. Too many longs, too much leverage, too many traders trying to run ahead of the market. And when the flush came, it came aggressively. But the fact the Binance CEO is now confirming that story tells us the market structure is healthier today than it was last week. Now, very quickly before we jump into the prices, thank you to everyone who has rated the show 5 stars. We are literally only around 10 ratings away now from hitting the 200 target for Christmas. And once we do, 2 of you will get 50 XRP each. If you haven't rated it yet, just tap the 5 stars and comment "done" so we can add you. And honestly, with the amount of interaction the show's been getting, we're even thinking about doing more giveaways before Christmas. But let's smash the 200 first, and then we'll see what we do next. Alright, let's get into the markets. Bitcoin is sitting around the $88,500 level. After last week's heavy correction, the market has finally stabilized, and today's move looks far more organic than the forced bounces we saw earlier in the week. It's not ripping, but it's climbing. And climbing in a way that suggests real buyers have stepped back in. Ethereum is holding around $2,960, and while it hasn't joined Bitcoin in any major way, it has at least put in a clean floor after a shaky few days. XRP is trading around $2.24, and that's interesting, because the price hasn't reacted yet to the Grayscale Trust news, something we'll dig into in a moment. BNB is at $870, holding firm with no major volatility. Solana sits around $137, which is impressive considering how violently Sol usually reacts during market dips. Tron is around 28 cents. Dogecoin is still hovering near the 15-cent mark. Cardano is around 43 cents. Litecoin at $86, and Bitcoin Cash still holding surprisingly well at around $555. Now let's get into why crypto is actually up today, because this isn't just a random green day. Something real has shifted. The big headline is that the total crypto market cap has once again climbed above $3 trillion, which is a psychological and structural milestone. Analysts have instantly come out to weigh in. One analyst from Crypto News said, "If these conditions hold for another week, we could be in the very last leg of the growth phase." And that's exactly what today feels like. Not euphoric, not explosive, just steady strength returning after a reset. A huge part of this uplift comes from outside crypto. Amazon's $50 billion investment into AI infrastructure. When a company that large commits that much capital, it signals something very simple. Risk appetite is increasing again. Wall Street sees AI and crypto as cousins. Whenever big AI money flows, crypto often rises with it. And today is a textbook example. Bitcoin miners in particular got a lift, because Amazon's infrastructure expansion indirectly increases demand for high-end chips, data centers, cooling facilities, and energy allocations, all sectors miners overlap with. So you get this weird but powerful feedback loop, where an AI mega investment ends up boosting Bitcoin indirectly. And that's what we've seen today. But the most interesting part of today's story, and the part barely anyone is talking about, is institutional altcoin activity. Yesterday, Grayscale's new XRP and Dogecoin trusts went live, and that's a bigger deal than it sounds. The Doge Trust is the headline because it's the first time Dogecoin has had a structured institutional vehicle outside of direct exchange trading. Early data suggests modest inflows, nothing explosive, but importantly, positive. There were no outflows, no signs of hesitation. Same with XRP. These aren't ETFs, but they behave like training wheels for one. Institutions test liquidity, structure, and custody through these trust products. If they behave well, ETFs become far more likely. The impact on price hasn't fully kicked in yet because these things move slowly, but the story is developing the way analysts expected. One fund manager quoted by CoinDesk said, "The Doge Trust won't pump the price overnight, but it sends the clearest signal yet that institutions are preparing for meme sector exposure." That's big. It means the old divide between serious coins and meme coins is dissolving. And it means that for the first time, legacy capital is preparing to treat meme coins as valid, liquid, tradable assets. This ties beautifully into the broader altcoin catalysts coming this week. Doge and XRP both have ETF-related events on the calendar, and Monad's mainnet launch is generating buzz across developer circles. You've got three separate catalysts, all aligned in the same direction. None of them guarantee price action, but they create a backdrop where altcoins are positioned for rotation, something we haven't genuinely seen since earlier in the year. And then we come to the confirmation story, the one that proves last week's crash wasn't the disaster some people framed it as. Binance CEO Richard Teng came out today and said Bitcoin's 30% drop was caused by pure deleveraging and risk-off behavior, not fundamental weakness. In his words, this was a leverage flush, nothing more. Which is exactly what we told you on this podcast last week. Too many longs, too much greed, too many people trying to front-run the next leg up. When funding rates stretch too far, the market punishes everyone at once. The important thing is what comes after the flush. And what comes after is usually far stronger footing. And today's price action is matching that pattern perfectly. We're going to take a quick break. When we come back, we'll break down whether this rebound is sustainable going into this week, what to expect from the ETF-related announcements, and how Amazon's $50 billion move could be signaling the early stages of a broader tech rally that crypto is perfectly positioned to benefit from.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
So let's pick up right where we left off, because the big question today isn't why crypto is up. We've covered that. The real question is whether this move actually has legs, or whether it's just another relief bounce before more volatility. And the honest answer is surprisingly optimistic. This looks much healthier than the bounces we saw earlier in the week. The market isn't forcing it. It's not liquidations running in reverse. It's not just shorts being blown out. It's actual, spot-driven buying combined with a clean macro backdrop and early signs of institutional repositioning. That's why the move feels steadier, slower, and more believable. One of the clearest signs of that strength is Bitcoin's behavior. Usually after a heavy correction, Bitcoin either snaps back aggressively or drifts sideways. Today, it's doing something in between, and that's usually the sweet spot. The market is letting price breathe. Traders aren't rushing into leverage. Liquidations are minimal. Open interest is resetting at a comfortable pace. All of this tells us the foundation being built today is far stronger than anything we saw earlier in the week. And that's exactly what you want going into a new month. Another positive sign is the absence of panic in altcoins. Normally, when Bitcoin corrects, altcoins fall apart. But this time, during the worst parts of the drop, the altcoin sector held up better than expected. Sol didn't lose its entire structure. Doge didn't get wiped out. XRP didn't collapse into the lower support zones. Cardano held. Even Litecoin held. These are not signs of a weak market. These are signs of a patient, coordinated one. And that brings us to one of the more interesting elements of today's rebound: stablecoin positioning. Stablecoin supplies have been climbing for weeks now, and when you see stablecoin inflows during a dip, that is usually one of the best leading indicators of a recovery. It means people didn't flee the ecosystem. They rotated into safety temporarily. And when the market finds strength again, those stables are used to re-enter positions. We're now seeing that in real time. Tether and USDC issuance upticked early this morning. That's not retail behavior. That's institutional and high-volume trading desks positioning capital. This also ties back to the Grayscale Trust news. It's easy to overlook a trust launch because it doesn't create fireworks overnight. But historically, when a trust goes live, inflows tend to be slow, steady, and quietly influential. The Doge Trust is particularly symbolic because it breaks one of the biggest psychological barriers in the industry: the idea that meme coins are beneath institutional interest. Well, they're not. Not anymore. And today proved that. We saw no selling pressure from the trust launch, no liquidity issues, and no market negativity. If anything, the Doge market stabilized slightly, which is exactly what you'd want to see. The XRP Trust, meanwhile, is even more strategic. Institutions have been starved for regulated, structured XRP exposure ever since the legal battles began years ago. With the trust now open, even if inflows are modest, it gives real money investors a clean pathway into the asset without navigating the complexity of direct custody. And when you look at today's calm and steady XRP price, it reflects that early confidence. But the bigger story behind these trusts is the ETF direction. Products like this don't exist unless ETF conversations are happening behind the scenes. Grayscale doesn't just wake up one morning and decide to build these vehicles. They build them because they believe regulatory appetite is shifting. They build them because the market is ready. They build them because institutional demand is already knocking. And that leads perfectly into the altcoin catalysts that are lining up this week. The Doge ETF whispers are growing louder. The XRP ETF roadmap is clearer than ever. And Monad's mainnet launch creates a completely different type of interest: developer interest. When a mainnet goes live, ecosystems start building. New projects begin. Developers test speed, throughput, and tooling. And when developers are active, liquidity eventually follows. Today's market behavior shows early signs of an altcoin rotation, but it's subtle. It's not about giant price pumps. It's about stability. It's about the absence of weakness. It's about coins refusing to break down even when Bitcoin wobbles. That kind of silent strength is almost always the first sign that altcoins are preparing for something. Now, let's talk macro for a moment. Because Amazon's $50 billion AI expansion is more than just a tech story. It's a crypto liquidity story. When mega-cap tech companies deploy that kind of capital, it tells the entire market that risk appetite is returning. It tells Wall Street that the next wave of growth is beginning. And crypto, as always, reacts earlier and faster than traditional assets. The rally in Bitcoin miners today proves that connection clearly. And remember, miners are one of the most sensitive sectors in all of crypto. They respond instantly to confidence shifts. Their strength today is one of the most reliable confirmations that the market is leaning bullish. So as we move into this week, the bigger picture that's forming across the market is actually far more positive than it looked just a few days ago. Crypto feels like it has finally shifted from panic to patience. And that alone is a major psychological reset. Bitcoin isn't exploding, but it's behaving in a way that shows confidence is starting to build again. Ethereum is holding its levels without any drama. Solana looks steady. Even the coins that usually wobble first are acting controlled. All of this points to a market that's trying to rebuild properly, rather than rushing into risk just because there's a bit of green on the chart. We'll keep tracking the trust inflows, the altcoin catalysts, and any comments from the major players that might shift sentiment. We'll be back tomorrow with another breakdown of everything you need to know to stay ahead of the curve. And as always, we will see you at the top.